All right, let's jump right into it, guys. We're going to cover quantum stocks. We're going to start with QUBT, and then we're going to move on to QBTS, RGTI, and Ionic. For these companies, I'm going to preface it. I'm going to preface by saying all these companies are super speculative. There is no fundamentals right now that suggest that these companies are a sure bet or that they will be long-term winners. This is super speculative. Quantum is not yet super proven in our world. It's still a super young technology. I mean, it's existed for a while, but for what these companies are trying to do, it's going to be hard task to achieve. It could be years away. We've even had reputable people like Nvidia CEO saying that quantum is still years away. So I will say, if you are looking to buy into quantum stocks and if you're looking at these as an investment, keep in mind that they're super risky. You are betting on stocks that are still in their early development stages and they're not guaranteed to be winners. And you're also betting against companies like Google and IBM that are building their own quantum computers. So while these guys may seem like the hot new topic, other companies that are a lot more well funded and have a lot more cash to spend, like your Googles, like your IBMs, are working on their own quantum solutions and quantum computers. So that's something to also keep in mind. That doesn't necessarily take the fact out that one of these companies could be a big winner, but it's something to keep in mind as you're positioning yourself. As far as the companies individually go, it's important to understand that they're not all working on the same thing. They're all working on different things. Think of QUBT, for example, as selling the picks and shovels and the photonics. It's coming from a security angle. So that's what they're trying to solve. QBTS is looking to sell quantum as a service. So it's for optimization. RGTI is a hardware scaling stock. And Ionic is more of an architecture to quantum bet. So they're all doing different things. And what your job as an investor is to pay attention to how well they're progressing. Imagine a biotech company that's working on a new therapy or a new drug, or a pharmaceutical company working on a new drug. You're watching for those trials. You're watching for them to go through stage 1, stage 2, stage 3, and eventually they can get to commercialization and start selling those drugs if they get approved by the FDA and they actually have customers. This is going to be the same idea for these quantum stocks. They're now working on the technology and they're spending millions and millions of dollars, billions of dollars to make it happen and bring it to real life. And whether they do or not just depends on how well they advance through each stage. And if they do advance to the point where their technology becomes sought after, they can either get bought out by one of these big scalers, hyperscalers, or maybe they can commercialize and become a fantastic big company themselves. I mean, everybody starts somewhere. As far as the four different companies go, we're going to go over their technicals. We're going to start with QUBT. And we're going to start by placing a support right here at 9.45. This dates back to this breakout here, which was in March of 2025. You guys can see that prior to this, the stock had that 945 resistance. It struggled to get above it. And when it did, it continued to rally for the months on end and is now back to that level. So we're going to place a support at 945 for QUBT. The next support below that point is not going to be up until 571. So unfortunately, like I said, the risk of these companies is the fact that they are so volatile and so young. They're subject to really big movement, and that can take it easily. So those are going to be the support points. So really, this whole area is going to be a support area for QUBT, because if it breaks below that 945 mark, it re-enters this consolidation point, and it may just hang out here for quite some time until maybe there's another push in quantum as a whole. Maybe quantum gets exciting again. Right now, it just doesn't seem that exciting. People were already worried about artificial intelligence spending and artificial intelligence valuations. Quantum is even further as a technology than artificial intelligence. At least artificial intelligence has real life use cases. Quantum, not so much. So, as you can imagine, because of those fears, people are more drawn to safer stocks right now rather than quantum stocks. It's going to need a strong positive catalyst for quantum stocks to reignite and start pushing higher again. QBTS, next quantum name. You can see the last time we covered this, the stock had a massive rally. Let's see what's happened with it since. So the stock is down significantly from its highs. It reached a low of about 18.40 before bouncing, and then there's a resistance right here around 39.80. And another resistance around 46. And a resistance around 32.25. So here are the levels that we're gonna have on QBTS. 39 to 40. 46 to 47. And then support is going to be down here right around 18 to 19. So that's QBTS. As mentioned earlier, this falls under the same speculative category as the rest of quantum. Finally, the next stock, I'm sorry, not the final stock, RGTI. Looks like is trading at a support of 21. And then a resistance of around 34.80. So not expecting much from this until it breaks above. If it breaks below, really, I mean, it can fall towards that 18 and even 16 mark. So not a lot of strength still from any of these quantum names. It's all looking like their movement is super muted right now. It looks like there's a lot of uncertainty around them. 56 to 55, and here are your supports. Yeah. I don't think I'm going to jump into any of these quantum names myself. I'm only covering them because I know they're super popular and a lot of you guys are probably in them. But I don't see anything super exciting from them right now. It looks like there's a lot of uncertainty. Yes, AI stocks are starting to boom again, but I think quantum stocks are going to need their own specific catalyst for that confidence to be restored in them. Looks like a pullback from the market so far today, at least since the morning. Hasn't been able to hold the highs. I'm seeing some movement in FLNC. I don't know if you guys are holding the stock with me. I've been holding it for a few weeks. Big upside move so far. If iron is moving the same. Iron is moving higher. Yeah, it looks like this is the strongest of the three. Good move. We're still down on this, but holding nonetheless. I like what I see. I'll update it for you guys in the swing trade group chat. Pretty big drawdown on SPY right now from the highs of day. It looks like that 691 mark acted as a big resistance. Next support we have available is going to be right around that 689.65 mark. It's going to call it 688 to 690. Yeah, after this drawdown, I'm curious to see if our scanner has any stocks on it at all. Yeah, it looks like we have one page. Usually we'd have 2 to 3 pages, but yeah, it looks like XPEV, that's another name out of China. Coupang out of South Korea. UPC. DDL out of China. Multiple stocks out of SPPP out of Canada. So a lot of stocks outside of the US on our scanner today. We already talked about XPEV. I'm sorry, we already talked about Coupang. XPEV is a electric vehicle stock out of China, super popular name. We're already holding BABA. I don't like to hold too many foreign stocks at once, especially when there's a lot of uncertainty. But I'm not opposed to buying another foreign company if I continue to see strength. So you'll notice SPY is pulling back, whereas BABA is pushing higher, at least today, and it's holding those highs pretty well versus SPY that's selling off to close to low of day. So that's already a good signal. If BABA can maintain strength today, that's already a good signal going into next year, because already in the next year it looks like people are buying Chinese stocks. That's not the case yet, but if we see that trend over the coming weeks, then we can potentially highlight China as a big opportunity going into next year. See how YMM is doing. It's a truck software company that's out of China. One of my favorite plays. Once it goes, but Doesn't look like there's a lot of movement right now.
I still think earnings matter. We have really good earnings in 2025. And the outlook for 26 looks pretty solid to me. Double digit kind of earnings. Is that enough to support this market view?
Yeah, I'm driving up also is technically 24 and 25. If you look at 26, two of the top three growing sectors in terms of earnings in this 500 are actually material.
So in about 12 minutes, we're gonna go over Open Door. We've already covered Nvidia and Iron. If you guys were here for that first video, I'm sorry we got interrupted. We actually, I ended the stream by accident, but that stream should be uploaded live, uploaded to our YouTube channel, and you'll be able to look back and actually see those Nvidia and Iron analysis. Very briefly over Nvidia, but we did go over Iron in depth, and then we just covered Quantum not long ago. You can look back to see those charts, and we're gonna go over Open Door in about 11 or 12 minutes. So stay tuned while the market consolidates and probably chills for the rest of the day. It's Friday. People just came back from the holiday. I don't think anybody's really working today. It's probably algorithms that's doing most of the trading on Wall Street. So I don't really expect anything substantial today. Hopefully, we have enough stocks that come up on our scanners for us to find some good names for next week.
That technology and applying it in a thoughtful way.
And then if you are just all in on the AI investment theme and you want to diversify out of only holding Nvidia or Alphabet or Meta even.
How to take that data and turn it into something useful. So it's the software, it's the application layer, but even just beyond that, it's the companies that are using that tool within their own industries. It could be financials, or it could be industrials, or healthcare. Maybe a lot of sectors. I think if there's one area in the market where we're perhaps less optimistic about, maybe the more defensive sectors, because we still, with what's in your prior guess, we think of the economy is still growing in 26. We don't think it's yet time to kind of pivot into those more defensive sectors.
Hey, Tom, how about the bond market? We have solid, high single-digit returns in the bond market here. I would say the two-year treasury,
All right, nice little bounce back from the market.
is that
Let's see if we can hold for the rest of the day. Like I said, I don't expect much today, at least not from the main indexes. Maybe we'll have individual stocks pushing, but what I will be curious to see is that now that SPY is pushing, let's go back to that BABA chart and see if it's affected BABA to the positive or the negative side. So it looks like not a lot of movement. So BABA and SPY it looks like are not moving in any sort of correlation. But BABA did hold those highs of the day during that pullback that we saw right now. So that's a good sign. And it makes it a top swing trade potential. We're already in this stock, as for those of you in our hyper alerts group. But this is just reinforcing that this position is off to a good start.
Yes, I love it. Have a muni moment with the clothes.
exactly? So, Tom, here, what's the real play here? Is it still a 60-40 outlook in portfolios in 2026, or how big are alternatives in your outlook here?
When we think about alternatives, we think about just diversifiers, and sometimes those stock on correlations start to get up a little bit. And so we look at areas of the market like global infrastructure, where we're less interested in the pure commodity, but more interested in this sort of continued physical build out of the world economy. That could be utilities, pipelines, bridges, toll roads, the physical aspects. Those are not as necessarily correlated to stocks and bonds, and have a nice inflation diversification if it stays sticky here.
What about getting outside the US? I mean, Paul's made a great point throughout that if you've been long foreign indices and you stripped away some of the dollar impact, how are you looking at opportunities outside of the United States?
Yeah, I love that the return we got, Caroline, for U.S. investors in foreign markets was either multiple expansion from very low levels, or currency translation back into dollars. But fundamentally, the story is very different in 2026. You've got high single digit to 10% like earnings growth for foreign developed like Europe and Asia, on top of the 2.5% dividend yield, on top of the cash flow driving the stock buybacks. And emerging markets seem to be set up for another solid year as well, with high teens earnings growth. That's send those earnings and kind of retail sales. So any impairment of that, whether it's a rise in unemployment or layoffs that are about confidence, that would be a risk factor for us heading into the new year. And then the other is kind of the careful what you wish for risk, which is the Fed wants disinflation down towards its target. If we were to see inflation meaningfully decelerate beyond that target, that would kind of bring in a different Fed regime in 26 and a different outlook for the economy.
Tom, it's an election year coming up in 2026. That oftentimes brings in a level of uncertainty into the marketplaces. How big of a concern is the election to you?
Obviously, it's a key event in 26 coming up, the midterm elections in November. I think our work has shown that the performance in the markets, it still is really part and parcel of what's going on in the economy, what's the expectation for growth, what's Fed policy expectations. That to us is still the primary driver of the outlook for 2026. The elections will obviously be on the horizon. It will be a newsworthy event, but we don't see it yet as an event that would cause us to change the perspective of how we see the economy and market performance in the first half of the year, please.
Tom Hagen, it's great to catch up with you, National Investment Strategies at US Bank Asset Management Group, able to go pretty global with us as well, even though he's at US Bank Asset Management Group. We thank you. Look, we've got plenty more to be digesting. We're going to go global, but in the world of AI, we're going to hear a little bit more about what Jason Wang's looking out for in terms of 2025 growth, where he sees 2026. An important conversation to have, given that a little rather late in the day on Christmas Eve, a statement went out about the latest acquisition or indeed licensing deal that they've done for Grok technology.
That was the story, the theme. It started out AI as, boy, this is a interesting story, and then they came out with a revenue bump up maybe 3 years ago. NVIDIA did, then it became an NVIDIA story, then it became a tech story, and then it became a totally economic, broad economy story. And it just feels like we're still just figuring out what some of the implications can be across different industries and different companies.
And who are the key players? Like, there's a wonderful story on the terminal today about how Larry Ellison, not Elon Musk, was 2025's defining tech titan. There's just not a story that Larry Ellison isn't in some way involved in, whether you're looking at your own world of media or you think about the consolidation or indeed the fight for Warner Brothers Discovery going on there and who's helping finance one particular deal for Paramount there, but also how he's just been in the very heart of the AI infrastructure build out as well.
It's amazing. Again, just one of those titan careers in technology, just one of the all-time greats. And now I think it's pretty to see him playing around in old traditional media. Who would have thought it at the beginning of the year? This is what we're going.
The current Unaffordable Care Act was created to make insurance companies rich. It was bad health care at much too high a cost. I'm taking on the gigantic health insurance companies that have gotten rich on billions of dollars of money that should go directly to the people. They will not be happy, but that's okay with me because you, the people, are finally going to be getting great health care at a lower cost.
Hold on to every memory this time of the year and make it another December to remember, because the greatest measure of the season is how it makes you feel. The December to Remember sales event.
Accident, and they got me $785,000.
Will Brothers! Call 1-800-222-2222.
That's my job.
Nature made with quality ingredients. Made to care for you every day. From Nature Made, the #1 pharmacist recommended vitamin and supplement brand.
This December at Saboma Casino Resort, playhouse hurry to see what's waiting for you in Wonderland. Win your share of $545,000 in prizes. You could win a 2026 Cadillac Estate. Saboma Casino Resort.
Delicioso.
All right, guys, let's go ahead and pull up Open Door. So it's time to go over Open Door. Open Door Technologies. We're gonna go ahead and zoom out. Always like to start with the macro chart just so I can see what's going on in the overall candles. Looks like Open Door has suffered a very significant drawdown over the last few years. And we'll talk about why in just a second when we jump into the fundamentals. But for now, let's talk about the short-term technicals. 520 supports. Another support right around 340. We're going to move this down just a little bit to 490. So there are the supports, and then we have a resistance right here at 8.28. And then another resistance right around 970. So there's a lot of upside and there's a lot of downside. So that tells us this is a high risk, high reward type play if you were to be in it, because the downside is about a 20% drawdown and the upside is about a 25% gain. So there's a lot of area in between the support and resistance points. What has happened recently with Open Door? They are acquiring homebuyer.com. And it's a push to improve online real estate marketplaces, mortgage services. So Open Door, what they used to do is they used to buy properties or buy houses from buyers, and they would hold them as inventory, and then they would go sell those houses to the public, and they would collect the spread. So they would make profits on that sale. So imagine that you as an individual can do this. You know, if you say you buy 10 houses, you're holding them as inventory and you're trying to flip them. And so they were pretty much a big version of that. And they did that very successfully in 2020 and 2021 when the housing boom happened, when home buyers, when interest rates were nearly 0%, and it was super easy to get in and out of a house if you had the money to do it, and Open Door had plenty of money to do it. And so now, and because the housing market has slowed down so much, what they're doing is they're attempting to gain new avenues of revenue that are potentially more steady and that are not so tied to just house sales. And so now, the way they're doing that is they're moving into services, and one of the services they're trying to offer is going to is through for example, a mortgage service, and it's going to be through a company called homebuyer.com that they just acquired. So good news that they are trying to get into a new field, that they're acquiring a company that can potentially expose them to revenue that comes from mortgages, not just from reselling homes. So that's a good news for Open Door. Is it gonna necessarily drive the stock higher immediately? No, because acquisitions can be messy. Implementing the other company's services and technologies to Open Door's existing employee base can be difficult. They could have early fees that are involved with the acquisition. So early on, the acquisition is usually messy, but through the coming 12 months, whenever they actually do acquire this company and finish the acquisition fully, you want to look for synergies between the two companies. Is the company actually benefiting Open Door? Was it a good deal? Did they overpay? Did they underpay? Is it really helping revenue growth? Is it driving sales in that area? So that's what's important here. And then nothing else looks like to be significant for Open Door in recent times. Let's go ahead and dive into their financials and see what's going on with the stock. Why was it trading so high at one point, and why has it fallen? And the reason why is pretty simple. You could see it right in the numbers. In 2021 and 2022, the company increased revenue from 2.6 to 8 billion and then 15 billion in the year that followed. That's an insane amount of increase, and they did so because of the housing boom that happened. And so obviously what they were doing was working for them at the time, but it looks like that slowed down over the years. Sorry about that. And as interest rates fell in 2023 and 2024, we can see that Open Door actually lost revenue. I'm sorry, as interest rates were raised in 2022, 2023, 2024, that's when Open Door lost a lot of revenue, and you can see there was a 55% year-over-year drop in revenue, and then that was followed by 25%, and that to investors was an immediate let's get out of this stock. But what I will say is that Open Door, during those 2020, 21, and 2022 years, it was never profitable, and they have moved closer to profitability even after their revenue fell. So their management is doing the right things. They're trying to move in the right direction. That recent acquisition that we saw is another example of that. But they're not there just yet. It's still kind of speculative. It's still kind of high risk. Balance sheet looks to be small, nothing substantial. And then the company's free cash flow is also small, but still positive, which is a good sign. So at $5.7 billion and with about 15% internally held shares, I would say comparing this company to Carvana, because that's what a lot of people are doing, and Carvana made a massive comeback from being a penny stock all the way to $440. I would say that Open Door has a lot more competition, and the housing market is even more volatile in terms of how long it can drag than the used car market. And the used car market has been hot because people have been buying more used cars in order to avoid, that new car payment and the expense of a new car. And so I think Carvana was more set up to catch the economic slowdown than Open Door. Open Door's recovery, is it gonna make a recovery back to the hundreds or to the hundreds? I think that's going to be a long shot up until we see the housing market come back and potentially the company's expansion into more of a services-based business that can potentially help out real estate agents, that can potentially help out with mortgages, that can potentially help them recover. But the housing market doesn't necessarily support a full-on recovery yet. And as far as Open Door, let's go back to the chart just so we can kind of go over the technicals. In the very short term, the stock is trading below most of its healthy moving averages, including the 10, the 20, the 50, and the 100-day moving average. The very next big moving average is going to be the 200-day moving average, which is right around 390, which would be below that 490 support as well. So there is definitely a lot of work to do for Open Door. I think the short-term upside move that it saw in 2025 was probably because of short-term catalysts, but the longer-term or the near-term outlook is still uncertain for now. So that's Open Door, you guys. We went over it. We covered it. So let me know. I'm only on for a few, maybe 10 more minutes. Let me know if you guys have any questions that you guys want me to answer. If you guys want me to go over any charts real quick for you, I can also do that now. You can let me know in the YouTube chat, and I can try to help you guys out before I log off and jump back into the Hyper Alerts group. I see your question about a put option, but if you're buying a put, what are you hedging? Because I mean, you would want to buy a call on VIX if you're hedging, because I'm assuming that you're hedging against a possible market downturn, and if that's the case, you either sell a put or buy a call. Um, and then 826.
Exclude all SPACs, we see that companies that went public this year delivered 19.6% return.
826, like, August 2026. Yeah, so I mean, you'd want to buy a put if I'm sorry, you want to buy a call on VIX if you're hedging. I like to hedge with because I'm more tech heavy. I like to hedge with SQQQ, the inverse to the tech index, but that's just me. But yeah, VIX maybe long term put, long term call might do it.
That's got a market cap of $60 billion. It's a 52-week high today, $45. So again, you get those big deals where everybody big institutional investors in next one.
Yeah, let's see. So what are my screener settings? Super easy. I just go to FinViz. I go to top gainers. This is going to be the more important one. And you want to make sure you're clicking all. Relative volume over one, current volume over one, and that's all I do really. And then it pulls up pages of this for me. I have a few other scanners that I go through, but this is my primary scanner. I go through these. 90% of them are not great, but that you find 10% here that are really worth buying sometimes, and that gets me through a lot of our trades. Pretty simple, pretty straightforward. And if yours doesn't look like this, just make sure you follow these exact instructions here. And then, like I said, relative volume over one, current volume over one, and you want to be on top gainers. And then what I do is I'll go through these companies. I'll go through their fundamentals on TradingView, and I'll look through any important details, any new contracts, what's moving them, why are they moving higher. And then if I see a trend, so for example, if I see that a bunch of precious metals stocks are higher on a day like this based on the companies that I see, then I'll start looking at other precious metals companies that maybe haven't moved up yet and that have potential to move up. So really, I do a deep dive based on what I see from these stocks.
We had one really good story this year from space and defense sector. The company is called Karman.
Yep.
It's doing really well. I think it's triple digits returns on a year-to-date basis. So that could also signal that there is appetite for companies from the sector.
Carolyn and I were just talking about there could be two
Cool.
big deals in 2026, OpenAI and SpaceX. I mean, these
All right, guys. Well, thanks for hopping on today. I'm going to go ahead and hop off now. I appreciate it. Happy holidays again. We'll see you guys next week. I'll be on Monday morning. Same link. If you guys are not subscribed, make sure you subscribe. And thanks again for hopping on. Take care. And happy holidays. Enjoy your weekend. Enjoy your family time if that's what you're doing today.